The biggest news story of 2024 has been regarding this man here, Warren Buffett, the Oracle of Omaha. His company, Berkshire Hathaway, has been reducing its stake in Apple over the past year. The selling off began last year in Q4 of 2023, and quarter after quarter, Berkshire Hathaway has been selling off its holding in Apple all the way up to the recent quarter of Q3 2024. Apple used to make up 49.5% of Berkshire Hathaway's portfolio, whereas if you fast forward to today, it now makes up 26.2%, as you can see here. As of November 2024, Berkshire Hathaway now owns about 5.7% of Apple shares outstanding, which is 907.6 million shares. Now, they've been doing all this selling whilst the stock price has gone up 25% over the past year. So many are wondering then, why is Buffett selling? Earlier this year, in the annual shareholder meeting, this is what Buffett said regarding why he's selling the stake in Apple.
No, but we have sold shares, and I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have now. American Express, which is a wonderful business. We own Coca-Cola, which is a wonderful business. And we own Apple, which is an even better business. And we will own, unless something really extraordinary happens, we will own Apple and American Express and Coca-Cola when Greg takes over this place. It's such a simple approach that it's almost deceptive. Most things, if you keep working harder and harder at it, you learn a little more math or you learn a little more physics. But investments, you don't really have to do that. You really have to have your mind set properly. So we will end up, unless something dramatically happens that really changes capital allocation, a strategy, and we will have Apple as our largest investment, but I don't mind at all, under current conditions, building the cash position. One thing that may surprise you, but almost everybody I know pays a lot more attention to not paying taxes than I think they should. We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past when I've been operating. And the federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year. And the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give. And I think that higher taxes are quite likely. And the government wants to take a greater share of your income or mine or Berkshire's, they can do it. And they may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. And we always hope at Berkshire to pay substantial federal income taxes. We think it's appropriate that a country that's has been as generous to our owners. It's been the place. I was lucky. Berkshire was lucky it was here, and if we send in a check like we did last year, we sent in over $5 billion to the U.S. federal government. And if 800 other companies had done the same thing, no other person in the United States would have had to pay a dime of federal taxes, whether income taxes.
So, to summarize what Buffett says, he still believes Apple is still a great company. He also believes that it will remain as Berkshire's largest investment in marketable securities. And he also believes that even after he goes, Ted and Todd, when they take over, Apple will still be in the portfolio. So, with such confidence in the position, why do we think Buffett is selling? Well, here's my theory on why I think Warren Buffett is selling. I think he's selling out of the company because of its slowdown and stagnant growth. The tech giant fundamentals such as revenue, free cash flow, earnings per share, and net income have not seen substantial growth over the past 3 years. The company is no longer growing at a fast rate and trading at a cheap valuation like it was when Buffett first bought in back in 2016. Like Buffett, I would want 50% of my portfolio invested into a company that does not have strong future growth prospects. So, how about we take a look at Apple's fundamentals and see where the company stands today. So, as you can see open up on this page here, I have Apple and we are going to take a look at its fundamentals. Currently, the company is at $3.59 trillion, making it the largest company in the world at the moment by market cap. Its forward PE ratio is currently at 32, with a stock-based adjusted free cash flow yield of 2.7%. So the free cash flow yield here is pretty good. It's not too bad, considering what you can get in the market at the moment. However, at a 32 forward PE ratio, the company is trading at a premium compared to the market, especially after you consider its fundamentals. So let's have a look at that. So as I stated before, the company has been trading relatively flat, as we can see here. It had a big jump up from 2020 to 2021 after the pandemic surge, almost $100 billion jump in revenue. However, since 2021, the company has been relatively stagnant. There's not much growth in revenue. And it is pretty difficult because when you're a massive tech behemoth like this, you can only sell so many iPhones, sell so many products and Apple services. So as the company is growing, it is becoming more difficult to monetize the company further. So we can probably expect less future revenue growth as Apple matures, or as it is matured. So next up, we'll take a look at the free cash flow. Now, the free cash flow in the last 5 years also gives a similar picture. There was a jump up from 2020 into 2021. However, since then, it's been ebbing and flowing up and down, but there's not substantial growth. And this is a big issue because for a stock to keep growing and increasing in price over the long term, it needs to be growing its fundamentals. So after free cash flow, we'll take a look at the net income. So net income over the past 5 years has been relatively flat. It's had a jump up from 2020 to 2024. So that's why the 5 and 10 year gap here is at 10%. However, if we take a look at these 3 years, it's been pretty flat. It peaked at 2022 at $99.8 billion. However, now it's come back down. So Apple really needs to find a way to revitalize its growth, increase revenue, increase free cash flow, and better their net income. And lastly here, we'll take a look at the earnings per share. As you can see, the earnings per share over the last few years is stagnant as well. So the company seems to be demonstrating very little growth, or if there is, it's mid to high single digit growth, which is not what you'd want if you're paying a 32 forward PE ratio for a company. Now, the benefit Apple does have is that it does have a high return on capital employed. So the company can consistently generate high returns on capital. And they're going forward into the future. My prediction is that the company is actually going to return capital to shareholders through an increase in dividends. As we see, year over year, they're increasing the dividend, as well as a lot of share buybacks. As you can see over time, Apple's drastically reducing its share buybacks. But again, share buybacks and dividends can only go so far. If the company is not growing fundamentally, then it's not likely going to perform very well into the future. And with Buffett having having 50% of his portfolio in Apple at the rate it's growing, it's really going to slow down the Berkshire portfolio. And I don't think Buffett will completely sell out of the position, because it'll still probably be a good capital preservation place. Like, even me personally, myself, I am invested in Apple. However, I am looking to reduce or trim my position. It only makes up 9% of my portfolio. However, I'm just looking to see that if I find a better opportunity with better future growth prospects and trading at a cheaper valuation, then I would probably sell out of Apple and enter that position instead. So this was just a quick overview of the main fundamentals. Obviously, the company still has great profit margins, a good free cash flow yield, plenty of cash, high amounts of debt, but it's not too concerning considering the amount of sales the company generates. So this wraps up why I thought Buffett is selling out of Apple. It's just mainly because of its stagnant growth in its main fundamentals. That's all for today, guys. Thank you very much for tuning in. I hope you enjoyed the video. If you'd like to keep up to date with all my future content, please subscribe, turn on the bell notifications so that you can keep up to date with all the future posts. Thank you very much, and I'll see you in the next one.